So we're continuing to talk about the evolution of the dollar and how the dollar becomes the preeminent global currency, which is something that the author goes through. We've talked about in the last couple of short videos that we did, I think up until Bretton Woods and how, or at least up until the collapse of Bretton Woods rather, and that in August 1971, Nixon suspends the gold standard, and with that last bit of restraint, you have a flood of inflation in the 60s and 70s, coming about largely through political influence over the Fed. And in August of 1979, Paul Volcker becomes chairman of the Federal Reserve and announces shortly thereafter, in October of 1979, a change in Federal Reserve policy. So under Volcker, what the Fed did is it targeted the money supply rather than just tweaked interest rates as it normally did. And this provided cover to raise interest rates to astronomical levels. I think it was the German chancellor that said it was the highest level of real interest rates since the birth of Christ. So very high interest rates put the country into a very sharp recession. Unemployment hit almost 11%, but it broke the back of inflation. And this becomes a key event in making the dollar the world's preeminent currency, which is that under Volcker and subsequent Fed chairman and with an independent central bank, the dollar, for whatever its faults, becomes the most stable currency in the world, the deepest markets, and to this day continues to be the preeminent currency. So that's kind of the arc of how it gets there. In the next few videos, we'll talk about some other questions that the author addresses.